Alright, I don't want to make this video too long, but I got quite a bit of tickets to go through. So instead of answering each one individually through text, because that would take a long time, I'm just going to do them through videos. Uh, and then hopefully it'll answer other people's questions as well. But I'll go through each ticket and then I'll send a timestamp for everyone to go to their specific ticket. But this will also be like a general Q&A as well for everyone. So we'll just go through some of the questions. So one of the tickets is I've watched Romeo's YouTube stuff and leaks, but I still struggle to come up with solid rules for what's a valid range. A single candle is nice and straightforward, but how do I qualify a range to be range? So it will can be manipulated with increased probability compared to, let's say, a random pullback. So how do you know what's a good range? I suggest you watch my YouTube video that I have on it. The ranges YouTube video. How to find a good range versus pullback. Well, first of all, a pullback is likely a lower time frame range, right? There's usually an expansion and then a retracement, which has a range inside of it, and then manipulates that range low and then continues. But on the higher time frame, it'll look like just one pullback. So you could also go through time frames to find a lower time frame range inside of that range inside that pullback to continue higher. But it may just look like a pullback on the higher time frame. And I actually responded to this one. I just said the time at which the time we take the higher low of the range is important, right? So you want to have it should align with open high low close or open low high close. So when we're creating the low or the high of the candle, aka the wick, that's when you want to be stabbing into the low into a key level, right? You don't want to be you don't want it to be closing and then stab into the level, because then an expansion wouldn't make sense at that point, right? We need an open high low close or open low high close. Okay, so the time at which we take the higher low into the key level is important, and also it's just a ton of trial and error. Like Romeo said, when you're identifying ranges, it'll just come with time and just doing on your own and spending your own time on your own charts, right? And you'll eventually get the hang of it, right? That's how when I first started watching Romeo, I also had no idea why he would select this certain range, right? The highs that broke the lows, or the lows that broke the highs, or the highs or lows right above a key level, right? Those highs are significant, and it also just come with time, right? It just like clicks for you basically. The more you just spot them, the easier it gets. Yeah, so that's basically it. The time that we take the range higher low is important. So your higher low should align with it with time, right? And then just trial and error. Trial and error. And error. Then he said, I'm gonna backtest, rewatch. Do you use a 3-drive pattern? Yes, I do. I don't like look for it specifically, but do you use a 3-drive pattern? Yes. I don't it's not like a rule where I have to wait for a 3 drives pattern, but if we're turtle souping a high, right, your stop should allow for it to do a 3 drives, aka multiple taps into the key level. Or if you're just waiting it out and you see that, then it's just like extra confluence, yes, but not a rule. And very important for me, I have not seen an explanation yet why price reverses straight away after a turtle soup, but sometimes it forms another range after manipulation. Okay. 3. Why does price reverse straight away after a turtle soup, but sometimes it forms another range after manipulation. Right, this often happens in ranging markets, right? If we're ranging and just chopping around, ranging, we'll likely form another range at the range low to induce more or engineer more liquidity, right? If price is just expanding very quickly, right, up and down in an expanding market, then if we already sweep the range low, right, it's likely going to expand straight away again. But if it's chopping and it's like moving very slow, then it's likely not inducing enough of one side of the market, you know. So it creates another range at the range low or another range at the range high to sweep again, right? That's one explanation. And then also, like the pullback, there's typically also another range on the lower time frame, usually most of the time, not always, but a lot of the time there will be a range at the range low. Like even on the 1 minute, it may look like we just turtle soup and then instantly expand, but if you go to like the 15-second or 5-second, there's likely another smaller range in there as well, depending on whatever time frame you trade. But there's typically a range at the range low a lot of the time. So ranging equal range range will likely form at the range at the higher time frame, range high or low. And then if we're expanding, equals instant reversal, right? This is what I've noticed off my tape reading, but it also logically makes sense. And then yeah, like here it's like wick slightly and then wicked again. Price here, wicked it slightly and then it wicked again. Okay, I'll just show these pictures because why not? But I'm pretty sure this is what he's talking about. If this would paste, it's not gonna paste, so I'll just screenshot it. I'm pretty sure he's talking about the can this paste? How when we tap into the range low, right? We tap into it multiple times, right? So here, in this case, it's kind of hard to tell because this is Romeo's example, but we take the range low here, but then we take this range low, this candle's low again, right? It's kind of hard to tell for this image, but I'm guessing that's what he's talking about. Just like for these images as well, we tap into the range low here and then here again. And this one I can explain because this is my example, but the reasons for this are time, right? So for why do we take the range high or low multiple times, right? So how do you know when to enter? First of all would be time, right? When we tap into a range high or low and time doesn't align, it often won't do the reversal, right? Because time doesn't align. So first of all, you got to wait for time to align. So that brings me back to the first point. The time at which we take the high or low is important, right? Time align. Time needs to align. And then second of all, here I'm guessing he's talking about why didn't you short here on this candle when it took it. It would be because of this key level, right? You're not instantly selling off the range high or instantly buying off the range low, right? All you want to be doing is buy or selling in this area right here. So in the area from your above the range high to your key level, that's where you want to be looking for sell. Well, you want to be looking for sells at your key level, but right in this area above the range high is where you want to be looking for sells, not at the range high. Well, sometimes you can if your key level is like right there, but right, since the key level is above here, right, all you're looking to do is sell above the range high, right? But where you're really selling at is the key level. So sell above range high, right, which is an area, and then sell at the key level, which is a specific price point. Okay. So that's how you know when to sell. If the key level holds, but I still wanted to know if there's anything regarding sweep. So there's what I said above. Pretty sure that answers everything this guy has. So let me just mark down. I'll just do timestamps for everyone. This was question 1. Timestamp should be 11:46. From 00 to 11:46. Right. Make this bigger. And we'll go into the next ticket. Or let me just put the ticket number in here as well. So you can, at the end of the video, you just go to the, or I'll take a screenshot and then I'll just send it all, and then you could find your ticket. Ticket 0013. Okay. Ticket number 2 will be from 11:46. 11:46 to sometime. Ticket -0015. Okay. So he says, I can catch this trade, but I have a few questions. We enter in a key level and made a first turtle soup, so I enter there, but it fails. Let me take a screenshot of this. So we enter in a key level and made a first turtle soup, so I enter there, but it fails, makes a second turtle soup. Why is that? So we have a key level. Let me see if I can find the day. March 26th, 4 o'clock, I think. Shoot. It's on GBPK. March 26th. 4. I think it was 4 p.m. Uh, 5 minutes sharp. March 26th. Or no, it's the 27th. Where is this at, huh? 27th at, was this 4 a.m.? I think so. Yeah, it's right here. Okay, so let me just mark this out. Yeah, this is where he went along. Had the open of which candle? The midnight open, I'm guessing. or daily candle open. It's the daily candle open, yeah. Right, so time aligns here, yeah, that's good. Right, you want to buy below this to create the wick. Then he says we enter in the key level. I made the first soup, so I enter there, and then it makes a second turtle soup. So he's talking about I'm guessing this, right? This is the first turtle soup, and then this is the second turtle soup. So why does it soup again? So I'm guessing he used this down close candle as a key level. But I'm not sure. Either way, why does this get soup twice, right? So looking off the 1 minute alone, right? Both of these lows get swept in different ways, okay? So first of all, this is a 3 drives pattern. So your stop should be able to allow for a third drive into the low, right? So where do you place your stop on this? You can either put it below the key level, which is, I'm guessing, this down close candle. So you have your stop here, either there or at an intermediate term low, which is also that low, right? So if you had your stop here, right, you would have been fine. You would have had a pretty good RR if you enter here and then stop here and then target up here, right? So you could either have it below the key level or an intermediate term low, which is both right there. So that was a perfect stop if you're gonna have one there, right? Which also allows for a third drive. But say we entered here, right? Or it might have been here. I'm not sure exactly where he entered, but let me. Right, I'm pretty sure he entered here, or it was here or here. But when we look at price, right, at how it took the low, these lows are taken in different ways, right? Here we get a wick below the low, right, a purge and revert, and this one we get a thick down close candle into the low, which me personally, I like more because, first of all, because it creates an order block, right, which gets respected very nicely right here. So if you don't want to enter here, then you enter off this order block, right? So this this low gets swept with a thick down close candle, right, an order block, and whereas this one just gets swept with a wick, right? When we also sweep only with a wick, it also creates an inefficiency, right? So it should get filled in. Okay, this one doesn't need to be filled in because we swept this low with a thick down close candle, right? And then we have the order block here preventing it from being filled in. Right here, there's no reason for this not to be unfilled because this isn't a high probability order block, right? So this would have been the ideal, like what you ideally want to see, right? Like if you're seeing this and we have a thick candle into the low, then you could either enter here, maybe at a lower time frame, like PDA as well, like to just refine entry even more, like off a volume imbalance, right there. So if you saw this, right, then that would be more ideal. Lower time frame, or we have like a 5-minute VI and then a thick candle into the low. You either enter off that or you enter off this order block here, right? So this would be higher probability order block. Whereas here, right, that is, it just ticks into the low, right? And then we have this long wick down here. Okay, and then we also have this VI here, this 5-minute VI, which should also get filled in, right? So we have a wick, a long wick, and then also a VI here. Okay, so if you were to take this trade, right, and you didn't see those inefficiencies, right, then either way, we hit the high that broke the low. So your stop should be at break even here, right? You shouldn't be losing money. Okay, you should at least be at break even here. And then if you take it out, get taken out again, you lost no money, you enter again. Okay, you just enter longs again here. Either that, or try not to long when there's inefficiencies below us, right? We had this long wick and this 5-minute VI, so it would logically make more sense to take out this high, right, and then continue down. But you shouldn't have lost money here. But either way, if you're not trading that lower time frame, right, as long as you're buying below this 5-minute or this opening price, right, and then your stop below this low, intermediate low, or higher time frame PDA, right, then it would have been a good trade overall, right? But that's why we swept it again, right, to fill in the wick, and also it wasn't really a high probability sweep. So let me see. Second question is, let me just type this out. How long is this video? Already 20 minutes. So one, why do we sweep a low again? Usually because there is inefficiencies below the high or low still, long wick or VI. Well, it could be also long wick, VI, FEG, right? Or not a thick down close, or not a thick candle into the high or low, right? Which would be a high probability order block, right? So often get swept again. Next, second question is, how many candles should range in order to consider it a range? Because in this case, there was only 2 15-minute candles before manipulations, which seems not much for a range. So, there isn't a specific amount of candles, right, to confirm a range. And honestly, it's not really it doesn't have to range like this, right? When you think of a perfect range, you're thinking like perfect, like highs and lows, right? It doesn't always have to do that. As long as you have a range high that's prominent and a range low that's prominent, right? And then some chop in between. It doesn't matter about the amount of chop, right? So the highs that break the lows that break the highs, and then the highs and lows just above a key level, right? Those highs are significant. Those highs and lows are significant. So as long as you have that as your range high and you have one of those as your range low, right, then it's often a good range no matter the amount of candles. So have range high and low as prominent highs or lows, right? So like, I don't know if I'll be able to find a good example, but even if we only have 2 candles, right, a 15-minute candle, on the 1 minute, it still also might range. I don't know if see if this example is good, right? So we had two 15-minute candles here. Like at this point, I mean that's quite an obvious range. Even though it's only 3 candles, right? On the 1 minute, it's like a clear range, but the 15-minute it's only 3 candles, right? So on the lower time frame, it's gonna be an obvious range. Well, it should be. So there's not really a specific amount of candles, right? It just also comes with time and trial and error. But as long as you have a significant high and significant low, right? There's also this smaller range in here, the low that broke the high. So if you had this, right, that's a pretty clean range. You have a prominent high and then a prominent low, right? And then you take out the range high and this range high here, right? So because these highs are significant, it makes it a good range, right? Doesn't really, it doesn't have to like accumulate forever, right? As long as you get pretty good accumulation, right? Interest building on both sides, and then a good high or a good low, then it should be good. There's not really, I'm not candle counting, you know. So that's the second question. How many highs and lows, and then just range inside, right? Just range inside, what a range should be, and then trial and error to identify ranges. Another question I want to make you, I'm rewatching Romeo's course. He said 159. 159 is the opening of the 4 candles and also applies to indices. Really confused about this. He said in the video 4 of second course. I'll rewatch it, but I know 159, right, is the 4-hour candle openings for Forex, but for indices it's 2, 6, 10. I just use 2, 6, 10 because it's I hardly ever use the 4-hour candle, but if I am, I'll use 2, 6, 10 for indices. But I'm guessing he's saying Romeo uses 159 for indices still, but that may be because he trades CFDs, which is the Forex version of Nasdaq. Let me see if it's the same times. Nas 100. Yeah. So I know Romeo trades not US 100 and SPX 500, right? The CFDs, which also has 159. So I'm guessing that's what he's talking about. But if you're trading futures, then it's 2, 6, 10. So that's probably 159. One Forex 4-hour candle openings and CFD, right, which is Forex 4-hour candle openings, and then futures is 2, 6, 10, right? I'm guessing that's what he's saying. Here's another example. In this case, I just wait for a turtle soup. That never came. Let me see. I mean, saying this turtle soup never happened. If you missed the turtle soup, then my suggestion is to just not take the trade and then review the trade. I can't really see much of this, but just reviewing why you might have missed the trade. Right, you didn't lose money, so there should be nothing to be mad about. So missed trade. Don't force a trade after. Review the trade. Right. You didn't lose any money. No reason to be upset. Okay. So that's ticket. Oh, thank you. Maybe I wait for turtle soup never came, or maybe it sweep my entry and then I have to wait entry again. But one thing is clear, I'm getting better. Thanks, putting me in the right direction. Okay, ticket. That's from 11:46 to 31 exactly. Ticket. Boom. Okay. Next ticket. I watched your range video twice, and I still don't understand how to find a certain 15-minute candle that has a significant range. Please, if you just type how you find them, type of candles, it would help drastically. The 15-minute candle, it doesn't really matter the time frame of the candle. It only matters, right, depending on your entry time frame. But the analysis itself into identifying the range doesn't matter on the time frame. So I'll go over these candle ranges that I made. Right, hopefully I can explain it. We have a good range versus a bad range. So why is this a good range, right? So this range, right, you know that the market is either expanding or it is ranging. Okay, so here on the left we get an expansion up, right? So we can start hunting for ranges, right, after this expansion, because if we are to continue higher, right, we'll expand, range expand, right? We can't just expand forever. Okay, so after an expansion, right, you want to be looking for your ranges. Okay, so this could either be an expansion, range, turtle soup, continuation, right? It could be an expansion, range, turtle soup, reversal. I forget the other ones, but yeah, I could. The reason like it'll range after this expansions is to a reversal or continuation, right? Whereas if you try and look for a range inside of this expansion, right, you're just gonna get wrecked. Okay, so you want to be looking for ranges after expansion, right? And then in these yellow circles, you can clearly see that we're generating interest on both sides, right? During an expansion, right? Like say this one candle right here. If you thought that was your range, first of all, it's during an expansion, right? So you'd be buying this retrace to this FEG, right? Not trying to look for a sweep of this range low, right? This candle low here, because it's in the middle of an expansion and it's not generating interest on both sides, right? You can see these previous days we're staying on the top half of this candle. So if you go down to the lower time frame, right, it's like an expansion up and then a range at the top of this candle, right? If this is the range low and this is the range high, we're not building interest down here. Okay, so that's not a good range. Whereas here, right, and between these two candles, we're making highs, lows, highs, lows, highs, lows, right? We're creating a ton of interest on both sides, which is what a range should do. Okay, so now that we have this expansion and then range, you hunt for your power 3 to continue higher. So we get a power 3 to the range low and to a key level, and then we reject it, continue to the range high, right? So that's why that's a good range, which is on the left here. And then this is a bad range because, see right here, ranges leads to expansions. Okay, so we have our range, manipulation, accumulation, manipulation, distribution. Okay, so why would you look for another range right after this one weekly candle? Okay, so if we have this range here and we manipulate down, right, why would we range again? We're expecting to expand through the highs, right, because we're in bullish order flow. So this is why this would be a bad range, because we're in the middle of an expansion now, or you're anticipating an expansion. Okay, because we swept this range low, so we should reject it and break above the highs, because that's what a bullish market does. Okay, so anticipating an expansion, right, which is what we get, and see, we break through this range high here, and we never end up going down to the low, and we never generate interest down here, right? So this is why this is a bad range. Okay, so let me go back to the ticket. So how do you find a 15-minute candle? Let me also pull up this other example. I think I explained it in the video, I'm not sure. Where is it at? Let me just find it in range. Bruh. I don't know why I can't search, bro. Was it in notes? Let me see. Ranged. This might take a bit. Okay, I think I found it. Okay, why this range? Right, so there's this one range here. I explained this one in the video. So I just suggest watching the video, right, and viewing it on your own charts. But we have this one candle range here, right, after an expansion, which is where you want to be looking for ranges. And then we get these two candles right after it, right, that don't take out the higher low. We range inside of the candle, right? We're building interest on both sides here and here. Okay, so that's what a range should do. And it's like the high that broke the low, I'm pretty sure, in there as well. Right, a significant high in the range. So that, right, those are all qualities of a good range. So that's why, right, this range is significant, basically. You just want to look for candles that what range is good? Right, you want to look for candles that range inside of the range, basically, like a range. It's a range. What ranges are good? Rewatch my ranges video. Prominent range, range high and low swing points. Swing points, right? The lows that break the highs, highs that break the lows, highs and lows just above or below key levels. And then look for candles that that don't take out the previous candle high or low. Right, so where we range, or we actually range inside of the candle. Right. So that's tickets from 31 to 40. Yeah, 40 is ticket 001606. Okay. Next ticket. New to turtle souping and ranges. Just want to know if this is a valid turtle soup. It's kind of hard to tell. What's wrong with my Discord? It's kind of hard to tell because I can't really see much of the chart, but I mean, it looks like it. This looks like manipulation. Right. Inverse and then continuation. So don't know if it was a good entry. So get your thoughts on that too. Yeah, struggle with entries most. Help with on that the most. If you struggle with entries, that's honestly a good thing because I think the entry method is honestly one of the easiest parts, right? Understanding the narrative and the drawing liquidity, right? If you know that, finding an entry is probably the easiest part, right? So that's probably a good problem to have. If you couldn't find an entry down here, like waiting for an inverse and playing the continuation, right? It's a pretty good trade, or by the looks of it. So just one, can't find entries, right? It's a good problem to have. Problem to have. Understand the draw on liquidity and narrative. Entries become the easy part, right? That's pretty simple as well. Ticket. Let me just move these. That's ticket 17 from 41 to 42. 41 to 42. 42.30-ish. Okay. Ticket 18. So pretty much the same question as another guy asked in general. I want to ask, how do you know if a range is actually valid to use? So you know when we sweep a low, for example, that's most likely a soup. So you know when we sweep its low, that's most likely a soup. For my recent trades, I've been using 15-minute candles as ranges. So I want to ask if anything I can prove to choose from ranges. Right, this is this would be the answer to what ranges are valid. For my recent, I've been using 15-minute ranges. I just want to ask anything I can prove on when choosing ranges. How to know if there'll actually be a meaningful range to take soup off of. I'm just trying to make sure ranges are perfect. This also comes with trial and error, right? Trial and error. They'll just get better. They'll get better at spotting ranges over time, right? And perfecting them. But yeah, you just want to have a prominent highs and lows or significant highs and lows, not just a random high and low, and then range inside of it, and then you want it the time the time at which we take the range high or low should logically make sense and align, right? So this is time and price aligning. You don't want to be taking the high or low at a random time. Okay. If we're taking the high or low at a manipulation, right? The open low or open high, which is the manipulation time, right? Then that's gives you more confidence that your range should be good. Okay, so the time at which we take the range high or low. yeah, and then that's how you know what a good range is. And it should be above a key level, right? Basic. Above a key level, right? Which is also this point up here. You want to be buying below the range low or selling above the range high, right? You usually don't want to sell at the range high or low. It's typically an area that you want to be selling or looking for buys or looking for sells, right? You never want to buy above a range high, never want to sell below a range low, right? So if you're not 100% sure about to buy below a range low, right, you should be 100% sure to never sell below a range low, okay? And then vice versa for buying above a range high, right? You never want to do that. So even if you aren't 100% sure, at least don't be selling there, okay? So you won't make money, but you at least you'll save money. That's basically this ticket 18, from 42.30 to 46.20. Okay, running out of room here. Gotta go up. $46. Okay, next ticket. 46.20. 46.20 to whatever time, and then ticket 20. Okay, so this guy says trader days, never buy in a premium, never short in a discount. Everyone says that you shouldn't long in a premium or short in a discount, but I see many times price will tap into a key level without reaching a premium or a discount, right? So when people say to never buy in a premium, never short in a discount, that's just to save many inexperienced traders, in my opinion. Right? It's the same thing as never selling below a low and never buying above a high, right? You can do it, which Romeo talks about. When a PDA forms, right, at the range high or low, and following order flow, then you could buy above that high or sell below that low, right? So when you have a higher time frame or a PDA that breaks the high or low, like an FVG, for example, then that's when it's permitted to buy above the high or sell below the low. But in my opinion, it's just so that it's better off if you don't do it, because RR will be better, and also it'll likely save you from a lot of losing trades, right? It'll just filter it out. When to buy in a premium slash sell in the discount is used to filter out inexperienced traders better RR, and when a PDA breaks the high or low of the range with order flow, you can buy above a high or sell below a low, right? I wouldn't really suggest doing it. I would rather just miss the trade, to be honest. But if you want to take it, then you can. Right, so we are bullish on and higher time frame reaches down into imbalance and expands from a premium without reaching imbalance in a discount. My question is, when can you look for longs in a premium? Yeah, so in this example, I can't really see the left of the chart, but this could be a breakaway gap here, right? If there's a breaker or something here, or an inversion, right? So then you shouldn't see it come to a discount if this is a breakaway gap, right? Because it shouldn't be filled in. And if there's a high over here, right, and this FEG broke it, then you could be buying in this FEG. But in my opinion, if you aren't in already down here, then I would just miss the trade. In my opinion, just miss the trade. That's ticket 50, 50, 40. Ticket 20. Okay, ticket 21. How to place my stop loss in a turtle soup entry trade. Okay, this is ticket 540. 540 and ticket 21. So how do you place your stop on a trade? You could either place it above or below an intermediate term high or intermediate term low, right? Place it above or below the higher time frame PDA, right? But it'll often be wide. If you use the whole PDA, right? But if the PDA is small, then it won't be. However, I don't really do that. I use the CSD stop loss or intermediate term high or low, but sometimes there isn't one to the left of the chart. So I'll typically do the CSD stop loss because it's typically the safest and the best R. But yeah. Wait for a CSD, set it at the swing high or low that forms, and then 4 would be a fixed R. Okay, so right, placing above internal high or low to the left of the chart, right, pretty straightforward. Place it above or below the higher time frame PDA. So if you have a bearish order block or something here, I don't know, and you're shorting here, right, souping the range high or something here, right, you just set at the high and then wherever. I'll just go for the fourth one because it'll just be easier, right? You could have a fixed RR. So if you have your market maker model or something here, and you're targeting this low here, right, you can aim for a specific RR, right, like a 3-to-1 or something, a 4-to-1, and just have a fixed RR, right? But my personal favorite is the waiting for a CSD. I don't know if I'll want to look for one. I have examples in the ones on Twitter, I think. But if we're right, if we hit a range high or something like right here, and we have a change in state of delivery, right, on the lower time frame, it'll look like this. There should be a green candle and then it's a black candle. So if it looks like this, right, you can go short off of this. Let me put this here. Right, that's what it looks like here. You can go short off the order block, right, and then just set your stop loss right at the swing high. But if there's a wick here, then you should, right, I don't know, I don't want to put a wick on it, but say there's a wick here, right, you put at the wick, right, to allow for this rejection block to be tapped. But there's no reason for price to take out that higher low again, right? If there's a small wick here and there's no inefficiencies here to the left, right? Time's aligning. There's no reason to take it out if we have a thick candle into the high, right? We should respect this order block and then just, right, dump. But this will give you a really insane R because you could just set it right at that low, and then you get the very top of the move if you do catch it. So the R is really, really, really good for a CSD trade. So that's the 4 ways, 55, 45, 4 ways to set a stop loss. Next ticket. Ticket 22. On 55, 45 to whenever. Ticket 22. So, do you always use a price-based discount or premium for the key levels for turtle soups? I don't always use price-based discounts because if you're buying below lows, right, we should be discounted already. But I'm guessing if you're talking about like, right, if we're in this expansion leg and we're ranging up here, if I only buy below here, and the answer would be no, right? Because I'm only focusing on this range, to be honest, right? When we take out this range low, right, we should honestly be in a discount of this leg most of the time, but we don't need to retrace to a discount, right? So if there's a PDA here, right, or like a breaker, if we have like a breaker here or something, right, then we should stop here and we shouldn't even reach a discount, right? And then the FEGs below it should stay unfilled and then we shouldn't reach a discount. So like we don't always need to reach a premium or discount, but if you want to add it to your rules, right, it would definitely filter out some trades. Do you always use a price-based discount or premium? I'm going to do PD for key levels. Right, so no, should be in a discount most of the time when turtle souping. If not, use breakaway gaps, right? Which I'll have a video coming on out on. Use breakaway gaps, and the left side of the chart to know if we're going to a discount or premium, right? If we'll even retrace that far. This example turtle soup video, we're trading in a range and didn't refer to a price-based premium. So if price is trading in a range, do we not have to look for a price-based premium or discount rate because there's already premium discount engineered from that range? Let's see. Trading in a range, didn't refer to price-based premium. So price trading in a range, we do not have to look for a price-based premium or discount rate. Yeah, so if we're expanding, right, and then trading into a range like this, this is a, like, logically, we do not need to get to a premium, right? I don't know if there's anything on the left side of the chart here, but it wouldn't logically make sense, right, to expand all the way to a premium, uh, and then dump afterwards, right? It's typically like a stab into the highs and then dump. Um, but it's kind of hard to tell without like any PDAs, if there's any PDAs preventing us from filling in this FEG right here, right? So if this was a breakaway gap, then you shouldn't expect it to get to a premium anyways, and then just be selling this FEG, right? So use breakaway gaps, and I mean, you could also use deviations of a range, right? If you deviate this, then there should be the 2 to 2.5, right? Potential reversal from there, and to not expand above it to get to a premium or discount, right? So you can use standard deviations of a range as well. How would you know to take a 5-minute market structure shift soup or the 1 minute below? How would I know to take the 5-minute soup or 1 minute below? 5-minute soup or the 1 minute below? I'm not really sure what this question is asking. Because it should be the same soup no matter the time frame. 5-minute market structure shift. Soup or the 1 minute below it. I'm not sure what it's asking, so if you could send that question again, ticket 22, I'll answer it. Another question: can there be a mitigation block market structure shift for soup, or only breaker looking market structure shift for soup? Can there be a mitigation block market structure shift for soup? I don't even look at market structure shifts anymore, right? Because if you turtle soup, you should see that literally most of them fail because of a turtle soup, right? With turtle soup, a breaker and bullish order flow, a bearish breaker and bullish order flow, and then soup, a bullish breaker and bearish order flow, which would also happen to be a market structure shift, right? And then it would fail. So I don't even look at it anymore. But can you have a mitigation block market structure shift or a breaker market structure shift? Yeah, both should work for turtle soup if you use either or. Mitigation block market structure shift or breaker market structure shift, right? Both should work as long as you're following the rules of turtle soup, right? Whatever happens after the turtle soup, right, should play out, because the turtle soup is usually the start or end of the move. Okay, that's ticket 22. So from 5:40 to 1 hour 04:20. Right, I want this video to be short, but I also don't want people to. I want to answer everyone's questions in detail and right, and so there'll be timestamps anyway, so you could just go to it. Next question, ticket 24. Got stopped out thinking this was a turtle soup. Okay. was trying to follow the order flow, but it just retraced on the higher time frame. Higher time frame. I think this is my solution, but I'd like to hear what you have to say. Yes, this looks like a pretty good solution. So, yes, this would be a good short, right? Range, high, into key level. I'm not sure what time we have an open low for this 1 hour candle. So it looks like we create an open at 15 low into these lows, right? And then expand, create the high in here, right? Which isn't good for turtle soup, right? Because then an expansion down wouldn't make sense if you're using open, low, high, close, right? So I don't know the exact time, but it doesn't look like time aligned with that, right? And this is the higher time frame analysis, right? Which was good, but on the even higher time frame, or like zooming out, there's this old high here, right? Old high, sweep these lows, right? Inside of this FEG. So we should expand up, right? So it's shorting right here. You're basically shorting below these lows, which isn't ideal, right? And I think this is a solution. Yeah, and then we had this order block. Yeah, so this is a good solution, in my opinion. Yeah. Right, we create this order block and then we respect this order block there. So ticket 24, ticket 24 knows what he's doing. Good job. You figured out a solution for your own thing. That's good. Ticket 25. From 1 hour. 0420 to 107.40. Wait, I got this mixed up. It should be from here. To 107.40, and then 107.40, and so on. Ticket 25. So how can I avoid this one? It also has a higher time frame PDA than wicked below and closed above, but it still failed. How can you avoid this? Wicked below, closed above with higher time frame PDA, but we still went lower. I'm not sure what, right? Probably something with the higher time frame analysis. Right, I don't know if we tapped into anything here. But we had this long wick. Right, we had this long wick down here, so this should have been your drawn liquidity, right? We had these failure swings, and this long wick down here below this range low. So that should likely be your drawn liquidity, right? I can't really see much of the chart, but we took out this high, and then probably inversed a lower 15-minute FEG or something in here, and probably respected it here. Implied FEG order block. We respected it here, and then we had these long wicks and failure swings below. So that's probably just drawn liquidity, right? So we'll do Why did the range fail? It also looks like it was in a premium. I'm not sure if this is a range here. This is probably the high of the range. Yeah, we took out this high here. Right, we took out this high, so right, a reversal is possible there. Right, I can't really see the chart, so it's kind of hard to tell, but mainly the long wick and these failure swings, right, and then taking out this high. So why did the range fail? Took out buy side, draw lower. That's pretty simple explanation. So from 107.40 to 110.50. Let's ticket 25. And the last ticket, ticket 28 from 105 or 110 to the end of the video. I'm struggling with my draw and liquidity when I get a clear overall draw, but then there are different possibilities on the way it can go there in setting conditions for that. So what if I'm wrong, I can identify. For example, I might have said that there's an FEG here, and if it gets inverted, then I'm bearish to put to another point, and then if it inverts and goes up into an order block and reacts to it, should I be sticking to the higher time frame before dropping down so there's less noise like this? I got a clear draw, but there's different possibilities. There's an FEG, gets inverted on bearish to another point, it inverts and then goes up into an order block and reacts to it. So how do I know the draw and liquidity? One, draw and liquidity. Yeah, you should stick to the higher time frame, right? Follow the higher time frame draw and liquidity and find an entry on the lower time frame, right? So follow higher time frame draw, look for lower time frame entry, and that's how you catch the big expansions, right? The higher time frame draw, right? Higher time frame anything will be stronger than the higher time frame, stronger than the lower time frame. And then I just suggest watching draw and liquidity YouTube videos. I know Dodgy DD, I think T Trades, I think his name is, and I don't know if Aidenomics has his anymore or not, but if you have it, then watch that. One more, I forget, Justin, Tactical Traders. Those are some people I would suggest watching, right? Just watch those draw and liquidity videos, and you should be good, honestly, because I don't teach draw and liquidity, so I think they teach it well enough. So I feel like there's really no need to. But that is all the tickets. So hopefully you guys' questions are answered, right? If you have more questions, just create another ticket. I'll always get to them no matter what. As long as the ticket is open, I will eventually get to it. It's just, right, sometimes things pop up where I don't feel like doing it at the time, honestly, to be honest. But that's all the tickets.